Hello, everybody. Welcome in. It is Tuesday, and it is obviously what used to be Tuesday, and now it's August Tuesday. We're going to talk about what we see right now and why we believe there's a very big probability of a potential Bitcoin breakout. We're going to talk about a huge amount of other stuff as well. So let's jump in and not waste any more time. Big thank you to the mods out there and everybody for hitting that magical like button. So first of all, math, money, and freedom. You guys know the drill. And of course, none of this is investment advice. We know this. So first of all, I thought this was very cute and I just had to share. Considering it's on chain, this is a chain of pine processionary caterpillars. And I just thought that would make everybody feel good today with all the craziness in the world. So anyway, the story today, I'm going to talk, it's a little bit different because there's simply so much to talk about. And there's been so much change in the first 10 weeks of this year. And it's been radical. Absolutely radical how things like the dollar, fiat currencies, etc., have been weaponized against obviously different people, places, and situations, and also some news about the petrodollar as well. And we'll talk a bit more about some of the minor updates that we see out there and so much more. So let me make, yeah, we got volume. The mic is working, I think. Yeah, that's always good. So let's jump in. First of all, this image is a bit scary, but basically over the last 10 weeks, fiat currencies, people have been threatened. The invasion of Ukraine has led to the biggest ever economic sanction response since World War II. And although economic warfare has been fought before, we are now entering a new unprecedented era of weaponization of money. Trust me, this is important to discuss because it impacts Bitcoin and crypto. So if we look at this chart here, this is the global FX fiat reserves. This is the amount that economies hold in fiat currency. You see a couple of things fall out. Nearly 80% of it's made up of dollars and euros, and the total amount is 12 trillion. And it's growing, and it's debasing at somewhere between 15 and 50%, depending on which currency you hold. So what are people going to do with this 12 trillion of assets and holding it? It's like the central banks all over the world scratching their heads saying, what am I doing with $1 trillion of dollars here and everything else? But there's more. Inflation. This is kind of interesting. Obviously, higher energy prices, commodity prices are bleeding into all markets, and they're going to make it very, very difficult for the Fed to pull off its massive effort to slow inflation. And, we've been talking about this for a long time now, but inflation is truly number go up technology. And is it really 21%? Well, let's have a look. This is a tweet I did earlier today. And members of Congress, this is a group of politicians in the US, they just got themselves a 21% pay rise. So the question is, did you get a 21% pay rise? Did your fixed income or pension go up 21%? I don't know. But it's funny that they paid themselves a 21%. Government workers, 21% pay rise. And I know teachers and medical workers that haven't had any salary wage increase for the last 5 to 10 years. This is criminal and this needs to change. But there's other things going on too. Since we're in this era of inflation, the cat is out of the bag. And sorry to go off on this tangent, but it's so critical for us to understand. Nobody wants to hold an asset that's debasing by 15 or 21% per year. Remember, inflation is de facto debasement. It's an erosion of purchasing power. And the real waves are hitting the system, or the proverbial hitting the fan, whatever you want to say. But now Saudi Arabia is, it says here, considers accepting yuan instead of dollars for Chinese oil sales. Think about that. People familiar with this will understand the significance. The US dollar's dominance is a function of the oil market. They call it the petrodollar. If this goes away, the dollar is in deep trouble. It'll put a hell of a dent in it. In addition, we were talking about things like a petro Bitcoin denomination in the past, but we knew something was going to come, but looks like it's already in the works. So next thing as well, when you look at politicians, they seem a little bit defeated now. So you have the new breed of politicians. This is Elizabeth Warren, her anti-crypto crusade splits left. So we have the left, kind of the Democrats in the US, and half of them now are pro-crypto. Most of the Republicans are very pro-crypto. But this poor lady, she's been going after crypto for a long time and was the most vocal crypto critic, I think alongside Janet Yellen as well, warning that it does expose consumers to danger. Yes, if you buy a crap coin or a Ponzi scheme, that many of them out there, etc., you are in danger. But I think people are smart enough to know that they can also lose their shirts investing in other assets too. She also claims it's ripe for financial crimes. That's been disproven. And the environmental ESG threat. Again, check out CTO's Larson's video. Amazing about the ESG FUD as well. So again, it looks like politicians are coming around, especially after the news in Europe as well. POW will not be banned. We knew it wouldn't. It was crazy. But anyway, arguing against regulations that could stifle what proponents say is a new avenue for financial inclusion and a breakthrough, and as an alternative to traditional banks, is a very good thing. It's what the world needs. You can't kill crypto. It's the toothpaste is out of the tube, as I say as well. So in addition, all of this, the reason I introduce you to all of you is because this has adopted or has accelerated crypto adoption. And this article here is from Reuters. Investors turn to crypto funds companies as Russia-Ukraine crisis escalates. Basically, Fundstrat as well, in their latest note to clients, said venture capital buyers invested $4 billion in 3 weeks, the last 3 weeks of February, $4 billion into crypto ventures, and another 500 million just last week. That's nearly $5 billion in 4 weeks. This is not slowing down. This is just getting bigger. But the real secret, what I tried to paint the picture here, is the conflict in Ukraine has weaponized financial and digital economy and really has accelerated blockchain adoption. We are seeing a reallocation to crypto and blockchain away from traditional assets like gold, like real estate, like bond funds. And it's all because of higher interest rates. So in addition, this is interesting because you can see the story is all related. We'll be covering more about expert investors tomorrow's video for part 2. But this guy, Bill Gross, he is the bond king. He is an absolute expert trader, extremely focused, extremely risk averse, extremely good at. Nobody has ever traded as well as he has in the bond market. But you know what? Guess what he jumped in and did? He was a vocal, somebody who was very, very against Bitcoin for the longest time. Hated it. And guess what he did? He just bought some. So again, for somebody who's so risk averse, and what he said was, the key quote from him today, this is my tweet from this morning, I think we need an alternative to the dollar, as we've seen in the last week or two. That is huge. Anybody who trades bonds, they watch what this guy does. If this guy goes out and buys Bitcoin, you know what they're doing tomorrow? Same thing. So extremely positive, extremely bullish news, but the world is changing and the pace of change is staggering. So buckle in, everybody. Now let's talk about some good news. We're going to do the good, the bad, and the ugly, as usual, because you guys like that format. If you don't, let me know below. So first of all, Bitcoin and crypto will grow as a store of value. This is from the head of the biggest bank in Singapore. His name is, I can't remember his first name. I think it's Piyush Gupta. Going from memory, don't quote me if I get that wrong, but it was from Bloomberg. But he says, regulators and politicians will be loath to give up control of monetary policy and economic management tools. Think of government officials. They just want to control you, and therefore will be very circumspect about letting private money grow. He said, having said this, though, I do think that private money, crypto, will continue to grow as a meaningful store of value, much like gold is today. So again, the governments won't like it, but it's going to grow regardless. Brilliant words from Piyush Gupta. Hope I got that right. Second, Dave Puell. You guys know I hate inflation. I love deflation. But market deflation here from this David Puell tweet earlier today says long-term holders are absorbing a proportional amount of the miner sell side every day, plus more of the outstanding supply. So basically, long-term holders keep possession of the coins for periods of time more than 155 days. That's typically it. And per this chart, you can see we are at a very high accumulation phase. The analyst suggests that Bitcoin proportion to supply held by long-term holders is at its most deflationary in history. And David Puell actually works for ARK Invest. He advises them on crypto. Historically high accumulation numbers. These are people that are grabbing crypto, taking it off exchanges, cold storage. We don't know if they're ever going to hit the market again. People now realize this thing is just going to pop. And that's the whole theme today. Will Bitcoin pop? Let's look at some more signals. This is another view. This is further information on precise formulas, including a Z-score version of the long-term holder market inflation-deflation ratio. As you can see, here we are at historical lows. What happens after that, more than 60% of the time, is we get a big bounce from this level. This is a historic low level of accumulation and lack of supply, and what we used to call the supply crunch in 2021. Another view is long-term holders. I forget who put this out. I think his name is I should have taken some notes. I can't remember. Anyway, long-term holders are accumulating at 7.6 times the issuance rate. That is super deflationary. So basically, if one coin is being mined and hits the market every day, nearly 8 are being taken off. Again, supply is becoming very scant. And another view, this one here, is clearly hardcore accumulation is in play. This is the green line here showing you the actual Bitcoin circulating supply, and it is shrinking fast. I put in 3 red rings to show you where we are today and what typically happens after this type of massive deflation. The long-term holders are grabbing it all. Typically get a nice bounce in price afterwards. The gold line indicates the actual inflation. This is from Glassnode. Yes, Glassnode. The gold line indicates the inflation, and you can see it's halving every couple of years. We have another year and change to the next halving cycle. And after we get to this big deflationary spike, we get a spike in price. The question is, where do we go next? We believe there is upside coming. And despite everything that's been thrown at Bitcoin, it is still being very resilient. Now, we are on the eve of the interest rate hike tomorrow, and what's happening with the markets. Here you see today the stocks, the S&P rose about 1.4%, NASDAQ about 2%, tech is coming back fast, risk on, good sign, Dow Jones, who cares, and commodities, oil fell to under 95 bucks a barrel, and gold fell to about $1,920 an ounce. And you can see everybody has kind of factored in the fact that the Fed is going to engineer what's called a soft landing. Nothing that will spook the market. Now, in a little bit of history here, it's very important for you all to know, because everybody's been worried about this big gray cloud hanging over our heads for the whole of this year, pretty much. But basically, market psychology, we're covering more of that tomorrow. Very important. If you play this game, you've got to understand the psychology of the game. In order to understand the recent discussion revolving around the importance of the Fed's actions, you got to understand human nature. People love finding narrative threads and grand explanations because we're biologically wired to make sense of the world that way. And humans confuse correlation and causation and zero in on evidence that supports their biases, their views, and they shun whatever suggests otherwise. We see this a lot with the trolls and the armies in Twitter especially, that, you know, if something doesn't inflate their bag, they get really upset. This is human nature. This is what, if you want to be successful, you got to fix this. We'll talk more about that tomorrow. Anyway, net, market shocks are caused by surprises and news about things like a pandemic or a cyber attack or a war that catches investors off guard is what shakes markets. Now, when things are factored in, predictable and anticipated, like the hike tomorrow, it's a nothing burger, and markets typically rebound, and that's what that chart's all about. So, I'm not concerned about tomorrow, but given that markets are efficient, which I believe they are, it's rational to assume that the Fed hike rates are completely priced in. So once we get that hike, markets will go up. It's bizarre, in this day and age. I think humans would be smarter, but sometimes they're not. Anyway, moving on from that, miner news. The hash rate is exploding in 2022. This is the hash rate plans end of year targets for 2022 compared to the current hash rates. And here we have, I've spoken a little bit about Core Scientific. But Core Scientific is the largest publicly listed Bitcoin miner by hash rate. It has 8.2 exahash today, making up 4.1% of Bitcoin's total hash rate. One company, 4% of the hash rate. And Riot is behind with 3.9. Marathon is about 3.8. And Marathon aims to be the fastest expander by increasing its hash rate 500% in 2022. That is insane. Now, Core Scientific targets itself to get to about 20.5, etc. Riot is also planning massive growth. And we will track all this. But remember, what's interesting about all this huge explosion in mining hash rate, it's all in the USA and Canada. So it said that maybe Texas will have 25% of all hash rate by the end of this year, which would be stunning. And again, politicians will no longer be able to ban Bitcoin. Not that they can anyway, but it's just something to consider. But remember as well, when we look at hash rate, there's many, many factors to consider. It's not just the company with the most hash rate. This is another one that we look at. It's the amount, and a big thank you to Arcane Research for this. This is the amount hodled by miners. So Marathon has 9,000 Bitcoin right now. Core, 7,355. And HUD8, 6,115. And the list goes down. We'll do another mining update real soon. We're working on it, just finalizing some numbers. But when you look at Bitcoin miners, it's more important to not just look at hash rate or the amount that they hodl on the balance sheet, but the key thing is capital efficiency and profitability ratios and growth and everything else like that. So we take everything into account, but we'll watch that space carefully. Now let's talk about some bad news to balance things out. So here, the Bitcoin put call ratio just changed. I look at this every single day, and those two gray arrows on the left indicate the amount of big new put action that just came into the market. Now, this are for all the puts and calls expiring April 29th. So I always like to look at about a month to find out what's going on. We also see a lot of bullish action on $50,000 and $60,000 strikes, which far exceed the bearish action. The put call ratio is 0.7, which is slightly higher than normal. It was much lower. It was like 0.51 yesterday, but it has changed radically. So I don't know what's going on, but somebody is making some bearish bets as we go forward. So we'll watch this carefully. The max pain price is 40,000. And for those out there who sometimes confuse max pain price, I talk about max pain price. It's a floating target based on options. It's not my floor, my target. It's a target based on options out there, everybody. So people get confused that they think it's fixed. They think if I say max pain is 40,000, Bitcoin will never go below 40,000. That's not what it means. So just making that clarification. Now, Ethereum is not as bullish as Bitcoin, which is weird. We've seen a lot of weakness in Ethereum lately for obvious reasons, but there's a lot more puts with a lot lower strikes. We've got a lot of people placing bets around 2,000, 2,100, 2,200, which is kind of staggering. But we also have some people betting at 4,000. So we'll see where this plays out. And here you can see the put call ratio is 0.79, which is nearly 10 basis points worse than Bitcoin. So we'll see where this happens. I expect in 2022 to see a big disjoint. The layer ones are not valued properly. That was always my thesis. The market caps do not represent the value of these layer ones. And there are layer ones that are better than what an ETH3 would actually look like today operating, but they are not priced correctly because nobody knows how to price this market. So everybody who holds a good layer one, be patient. It's going to come around, but we've got to get through some other stuff first, which I'll talk about later as well. So let's talk about ETH correlated to altcoins. So just today, the Bitcoin ETH correlation was set at 0.9, closing in on an all-time high of 0.95, which we hit in May 2020, I think. But it's interesting to see previous high correlation periods that were caused by sudden sharp sell-offs. So when there is high correlation, sometimes things just break away. Now, the recent trend has seen a steadier growth, and this suggests that the market overall has tended to move in the same direction throughout the last year, with all coins in general seeing higher beta. In summary, all coins are riskier, higher beta, sometimes higher return. But Bitcoin has been leading the show so far this year. Now, let's talk about follow the money. This one is one we look at every single week, this day of the week. So this is the money that flowed in to the different assets. Excuse me while I drink some water. So here you see a little bit of bad news. This is why it's in the bad category. We saw outflows of 110 million last week, following a 7-week run of inflows. Now, 80 million of the outflows came from North America. Very important. US is divesting, but kind of weird to say why. There was a little bit of nervousness probably around the US presidential executive order, but I'm pretty much guarantee you next week you'll see massive inflows. Now, Bitcoin saw outflows totaling about 70 million off the back of some very low volume. Ethereum, on a relative basis, saw large outflows last week. Again, this is the Ethereum weakness we're seeing. This is why I believe we're going to see a breakout between the new, what I call murderer's row of layer ones, and maybe potential shrinkage of Ethereum as go forward. We are watching that very, very carefully. So in other ones as well, you can see Solana, Ripple, and Polkadot saw tiny little outflows, like 300,000, 700,000, and 0.9. And remember, year to date, Litecoin is still positive, 2 million. Solana, 7 million. Bitcoin, 94 million. So they're still up there. Ripple even up 4 million, but there was a little bit of weakness. But the bright spots from last week, Litecoin and Cardano were up $200,000 each, which interesting to watch. Cardano's getting some money, so is Litecoin. Now let's talk about Luna. This big thank you to Sanjay for sharing as well. This is kind of funny, the games that these people play. I call it the baller games of Luna. So a degen who did an online public gamble. I've been known to do that myself, which is very dangerous. So I don't want to be too degen-y here. But a guy called Sensei Algod, he is a degen investor, called Terra a Ponzi scheme, and it made the project's community an offer it shouldn't refuse. $1 million if the price of Luna is higher in 12 months. Do Kwon, being the degen he is himself and the founder of Terraform Labs behind Luna, he accepted the bet and put up the funds. And then within no time, somebody else came in and raised the stakes to 10 million, and Do Kwon accepted that. So we've got these gambles going on. Do Kwon now, he's got $11 million on the line, betting the price will be higher a year from now. You got people betting against him. Now, technically, when you look at the structure of Luna, it is a function of the adoption that drives the success. It's got to get through that 2-year period recovered, and should I buy Luna? I think the upside is worth the risk of the downside. I think these guys can pull it off. And part of my thesis is because if Tether has a chink in its armor, which I believe it does, if it goes down, UST could take its place. So we'll watch that carefully. Now let's talk about the ugly news. Now the good news is not that much ugly news, except our friends at Bain Capital, the doofuses that they are, talk about tone deaf. They make this point of the new team, the crypto team, that are investing, I think, $650 million. They're all male. And they posted this on International Women's Day. So talk about stupidity. Anyway, hopefully they'll learn. Let's look at a couple of charts real quick. We're going to look at Bitcoin, Ethereum, gold, and US oil. Not necessarily in that order. So first of all, the invasion timeline of Feb 24th, that's when I became a degen and I put all my chips on the table. You can see what happened here. Oil rallied hard, shot up to $126. I was primed to short it at 110, but I was fully invested and didn't have the margin available to short it, and I wanted to. Oil is now 95, so it would have turned out really well, despite a little bit of nervousness and tremors. And by the way, sometimes in the market, you got to have your thesis, you got to stick with it. If you see something going against you, don't get scared. Sometimes it pays to just wait a couple of days for it to come back down to earth. You may not get the exact top, but if you're close and you know it's going to revert to its mean, hang tight. And that's what happened with oil. So it went to 100, went from whatever it was, I don't know, 80, 90 to 126. 110 I knew was not sustainable. Now it's 95 or less. And we'll see what happens. But the key thing is, since the invasion, oil is now down 1.2%. So it had a huge spike and then down. It fizzles out real fast. Now, gold also had its run up. It went up a whopping 8.3%, the biggest move gold has made in probably 11 years. But it completely fizzled out as well. It's now down 2.2% from its February 24th prices. However, Bitcoin is up 11% since the invasion. So I know a lot of you are complaining, oh, Bitcoin's been trading sideways for a long time. It's like, Amazon traded sideways for 11 years. 11 years. And then it made 13,000% in the subsequent 9 years after that, or 8 years, I can't remember. So don't be too impatient, everybody. It's a key trade. Now, oil, as I said, will go back to $60 as my target, but Mike McGlone came out and he expects oil to go back to $40. What a short if you can hold it. So anyway, it's pretty obvious when these things happen, but just the idea is to look at these examples of these historical spikes, be ready for the next time. Sometimes you just got to be that sniper in the woods, wait for the right opportunity, and have your powder ready to go. I didn't because I was all invested, but next time I will be ready. Now, Bitcoin dominance is on the gradual rise. Now, here I painted a big, ugly red line across the middle of this chart. Bitcoin dominance is about 43.52%, which is a bullish sign. We're definitely not in any altcoin season. But if we get close to that 46 to 48% level, that's when we start swapping to alts. That's when the money will move from the mothership to other assets, and it'll be the winning assets. Maybe some of those winning assets will bounce early, but we'll monitor that carefully. We're trying to build out a model that actually identifies the key times at which to swap and swap between assets as we go forward. So stay tuned for that. That'll be a fun one. And volatility is rising as Bitcoin price is flat. So if you look at this line here, the top in the white, and again from Arcane, these guys are great. The top in the white is the Bitcoin dollar price. With the price on the left axis, and the bottom in the green is the volatility index on the right. And you can see the volatility has spiked. Now, what happens after a spike in volatility when the price is flat? Yes, bounce up. So we'll wait and see. Again, every single indicator that I look at is pointing to a breakout in price. But wait, there's more. So look at this. So here we see kind of a compression between the two green lines that I painted in there. You've got lower highs coming down the pike ever since the beginning of this year, and you got higher lows. You had a 33K floor on January 24th. That's when I went in crazy for the first time into MicroStrategy. And then we had the second floor, 34.6K, February 24th. We hit the 45K glass ceiling a little bit above it, a little bit of a lower high last time. But here, everything we see, we're seeing lower highs, higher lows, and a large move seems to be imminent from a technical perspective. Anything can happen, everybody. That's the risk of investing. Somebody could press a button and it could be game over for everything. But funding rates as well have now been at or below neutral levels on Binance and Bybit for over 100 days. That means we have now been in a pessimistic funding rate regime for longer than we ever saw during the summer bear market of 2021. Another reason I'm pretty convinced something's going to pop. So, again, not slinging hopium, just looking at all the stuff I look at. And these are historical numbers that we've covered. So let's look at this one from Bloomberg. Again, super tight range. Here we see Bitcoin has stayed within 10% of its 50-day moving average since early Feb. Now, when you look at the history of this, at the top, you see the price chart. The red line is the 50-day moving average. At the bottom, you've got the number of consecutive days within the 10% 50-day moving average. What do you see here, ladies and gentlemen? You can see that this is highly unusual price activity. Bitcoin has only stayed thrice, which means 3 times in 5 years within this range. Further proof. A breakout is coming, and most probably will be to the upside from everything I've showed you. There's no downside. The downside's now maybe 34, 35K, and the upside is 68K. So what would you want? Now let's look at another view of the 50-day moving average. Here, when you look at this, you can see deviations from the 50-day moving average and extreme deviations shown with the Bollinger Band that I've painted here. So the Bollinger Band shows when it's overbought, but also when you have the confluence of an overbought outside the Bollinger Band in combination with a big deviation from the 50-day moving average. I'm not saying short Bitcoin, but it's a pretty good indicator to short Bitcoin. So again, we're working on a whole bunch of stuff to really identify how we can trade this stuff. We're doing a lot of back testing to make sure we don't make a mistake and before we unleash the beast. So with that, everybody, tomorrow, hopefully early as possible, Thank you for all of you out there who completed the survey that we have put together for you. There is a lot of work behind the psychology of investing. But again, it's key, absolutely key, everybody, to be aware of who you are, what your strengths are, what your weaknesses are, and how you can shore up those gaps using either tools or analysis. It could even be a subscription to a newspaper, who knows what. But thank you. We put up the survey on 2 different channels, Patreon and Twitter. We had over 1,500 responses within an hour. So you guys are hungry for this. To be statistically valid, we need 500. We've got 3 times that. So the data will be really good. We'll be able to say what the audience is on Twitter versus Patreon versus how it stacks up to the world's best legendary investors across all the parameters, and we've created our new little 16-box profile. So you will find out tomorrow where you fit. So if you haven't hit the survey, hit it, complete it. The more data, the better. And we'll have it all crunched all over through the night and tomorrow morning, ready to prepare. We'll also showcase how the legendary investors, what they do, what makes them successful. Super excited. This is like 2 or 3 weeks of work now coming to an end, but it's just the beginning. Again, it's all to help you guys. Thank you, everybody, for being here. Thank you for the stickers that we donate and everything else, and I'll see you all tomorrow. And thank you to the moderators in the chat.